Welcome to our market analysis for today, where we'll be diving deep into the world of capital expenditures, or CapEx. This critical financial metric is shaping the future of industries across the globe. And today, we're seeing some fascinating movements that you won't want to miss. Let's kick things off with a look at the technology sector, which has been absolutely on fire this week. The sector surged an impressive 7.9% over the past 5 trading days, adding a staggering $57.2 billion to its market capitalization. Software and IT services were the standout performers, each climbing around 8.2%. Meanwhile, hardware and storage weren't far behind, posting a solid 7.1% weekly return. Technically speaking, the technology sector formed a bullish continuation candlestick pattern last week. This is a hugely positive signal, suggesting that the current uptrend is likely to persist. It's clear that buyers are firmly in control, continuing to push prices higher. In fact, we've seen strong momentum in this sector for quite some time now, and there's a real possibility that we could see new highs in the near future. But what exactly are capital expenditures, and why should investors be paying attention? Simply put, CapEx represents the investments companies make in acquiring, upgrading, or maintaining physical assets. We're talking about things like buildings, machinery, technology, and infrastructure. These aren't small potatoes. These are long-term investments designed to drive business growth, enhance productivity, and maintain competitive advantages. To give you an idea of the scale we're dealing with, the global capital expenditure market was valued at a mind-boggling $653.9 trillion in 2022. But hold on to your hats, because projections show this figure skyrocketing to $2,345.70. Trillion by 2032. That's a compound annual growth rate of 13.8%. From 2023 to 2032, the numbers are truly staggering. So, what's driving this explosive growth? Well, we're seeing massive investments in greenfield facilities and modernization projects across the board. There's also a significant shift towards renewable energy, sustainable technologies, and digital infrastructure. And let's not forget the robust infrastructure spending, particularly in North America and Asia Pacific. Now, let's break down the leading industry sectors for CapEx. In the manufacturing sector, we're seeing a focus on plant upgrades, automation, and robotics. The Industry 4.0 revolution is in full swing, with smart factories becoming the norm rather than the exception. The energy and utility sector is pouring money into renewable infrastructure and grid upgrades. The transition to clean energy is well underway, with significant investments in battery storage technologies. But perhaps the most exciting developments are happening in the information technology sector. Cloud infrastructure and AI hardware are seeing unprecedented levels of investment. In fact, the surge in AI data center investment is nothing short of remarkable. The top AI and cloud hyperscalers, we're talking about giants like Amazon, Microsoft, Alphabet, Meta, are projected to spend over $320 billion in 2025 on AI-specific CapEx alone. That's a quantum leap from previous years. The transportation sector is focusing on fleet modernization and logistics systems, with a clear trend towards electrification and smart logistics. Meanwhile, the semiconductor industry is engaged in large-scale foundry construction and equipment upgrades, driven by the need for advanced processes and increased capacity. In healthcare, we're seeing significant CapEx allocated to medical equipment and facility expansion, with a strong emphasis on digital health tech and modernization. And in the real estate sector, investments are pouring into commercial property and data centers, with a growing focus on EV charging infrastructure and green buildings. Geographically, North America is leading the charge with major investments in Industry 4.0, renewable power, and data centers. The Asia-Pacific region is seeing strong infrastructure build-out and manufacturing expansion. And in Europe, the emphasis is squarely on sustainability, clean fuels, and digital transformation projects. Looking ahead to 2025 and beyond, we're seeing some key market trends emerging. Digital and AI transformation is at the forefront, with companies boosting CapEx for digital platforms, automation, and AI infrastructure. This is revolutionizing operational efficiency and scalability across industries. Sustainability is another major trend with green capital investments. Particularly in renewables and sustainable manufacturing, rapidly rising in priority. We're also seeing a shift towards asset-light business models, with more companies adopting leasing, outsourcing, and shared service models to boost financial flexibility. The economic uncertainty and volatile interest rates of recent years have prompted more proactive scenario planning and real-time CapEx analytics. And as we move into 2025, easing inflation and improved market confidence have sparked a capital market rebound, fueling M&A activity and infrastructure investments. Of course, it's not all smooth sailing. There are challenges and risk factors to consider. Geopolitical tensions, including trade conflicts, regulatory shifts, and supply chain disruptions, are impacting project timelines and CapEx allocation. Economic cycles, particularly interest rate fluctuations and inflation pressures, are driving shifts in CapEx prioritization and long-term planning. The rapid pace of technological change is another factor to watch. High CapEx to revenue ratios, especially in sectors like cloud and AI, carry risks if revenue growth slows. Companies need to be strategic in their investments to ensure they're not overextending themselves. So, who are the key players driving these massive capital expenditures? In the financial sector, we're looking at institutions like J.P. Morgan Chase and Co. Bank of America Corporation, Wells Fargo, Citigroup Inc., U.S. Bancorp, and of course, we can't forget the tech giants and hyperscalers like Amazon, Microsoft, Alphabet, and Meta, who are pouring billions into AI and cloud infrastructure. As we look to the future, it's clear that the capital expenditure market is entering an era defined by rapid innovation, digital transformation, and sustainability. While traditional manufacturing and heavy industry remain foundational, the momentum in technology, AI, and green infrastructure is reshaping CapEx strategies globally. Strategic asset allocation, responsive scenario planning, and sustainable investment will be key to market leadership in the coming years. Companies that can navigate these complex waters, balancing the need for innovation with financial prudence, will be the ones to watch. In conclusion, the world of capital expenditures is dynamic, complex, and full of opportunity. From the technology sector's impressive gains to the massive investments in AI and sustainability, we're seeing a landscape that's evolving at breakneck speed. As investors and market watchers, it's crucial to stay informed and agile, ready to capitalize on the opportunities that this rapidly changing environment presents. Remember, in the world of CapEx, today's investments are tomorrow's competitive advantages. So keep your eyes on the markets, stay informed, and be ready to move when opportunity knocks. Until next time, this is your market analyst, signing off. The information presented in this report is intended solely for entertainment and informational purposes, and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.